Hi, this is Scott Schubert, and we just had another FOMC statement release. And as I was going through the experience of watching this FOMC statement and the reaction that we've had, it occurred to me that once again it has been truly confirmed that the most important thing to look for when trying to read financial markets is the patterns that financial markets make. And a lot of times we get caught up in what we call the fundamentals, which is the reasons for the movements that the market makes as it makes these patterns. But the most important thing is that it makes these patterns and it never stops doing it. And so that's the one thing that we can really depend on. So before the FOMC statement came out, I went to all of these resources for fundamental research: Forex Factory, Daily FX, Financial Juice. Read the stuff that's coming out as we get closer to the news release. Trade the News, Rand Squawk, Jarratt Davis. Check his analysis and his daily trade recommendations and his risk events. Currency news trading, Daily FX, and read all of the articles. Watch the videos of different expert analysts, both technical and fundamental. Bloomberg, make sure that you read the stuff that's coming out on there. Financial Sense, Reuters. And after gathering all this information, I was convinced that the news was going to be negative for the US dollar. But if I had never paid any attention to that and was doing what I always did before, I would look at this pattern on the euro versus the dollar and say the only possible result from this would be the end of this correction. If the FOMC produces any kind of an effect, it would not be the continuation of this correction, because you can see that the correction starts way back here and it has a bunch of waves. It's near completion when the news is about to come out. So in the past, just that alone has always worked for me. You can just look at the charts and see, what is the pattern? Is there a trend? Is there a correction? Can you see, is it coming to the end of a trend? Is it coming to the end of a correction? Back in the past, has it ever happened that a correction just continued? Here's the last time there was an FOMC statement release, right at the end of a perfectly clear sideways correction, and the only thing that happened was it broke that correction and continued down, and it continued down for quite a while. That was in September. In July, when this FOMC statement came out, we were halfway through an ABC correction on the euro versus the dollar, and after the news came out, this shot up and completed the pattern that it was already in. In June, when this came out, on this time frame, we were halfway through a trend in the process of going up. So after it made the wave one, it corrected and continued that uptrend. That uptrend was a part of a bigger pattern. When the news came out in April, right before it came out, there was a thrust of an uptrend in process, and the news only caused this to go sideways. So the news caused a trend to temporarily stop and then continue up for one last time later on after that. Back in March, there was a correction going on, and the correction had been going on for quite a while before this came out. And once again, we got the end of a correction in March. Clearly, a sideways correction ended right at that point when the news came out. In January, after the market had been moving down in an overlapping pattern prior to the news coming out, after the news came out, there was a sudden continuation of a downtrend. In December, this correction came to an end right when the news came out, and there was a strong thrust down as the market plunged down right after the FOMC came out. In October, you can see that there was a correction in a series of waves going down, and this is just a typical correction that you would always see. And then the FOMC came out and it formed the end of a correction. You can see that from this pattern, there probably wouldn't be any way that this could form some other kind of a continuation up, but it formed the end of a correction. And the interesting thing is that you can see that, and you would know that that would be an entry, even if you didn't know that the FOMC is coming out. Before that, in September, we see there's a typical sideways movement in an uptrend that is the same that we would always see whenever the market is forming its normal patterns. And we can see that there was an entry that will be the same as any entry that we would always see. And this is where the FOMC came out, and you can see that the only possible result to this pattern would be a long entry or no entry. And the interesting thing about that is you can see that even if you didn't know that FOMC was coming out, and even if you didn't know how to interpret the reaction to whatever the FOMC statement happened to be saying. July seems to be a month when the FOMC doesn't have a huge effect, and you can see here that before the FOMC there was a strong movement up, just a slight sideways correction on a shorter time frame, and then the market continued up slightly. And if you go out to a longer time frame, you can kind of see that that sort of represents a last wave of an uptrend that started from way back before that. Back in June, we have a very distinct pattern, and there's a sideways series of overlapping corrective waves going up until the very time when the FOMC came out, and then it produced an end of a correction. That would be the end of a correction that you would normally see without knowing if FOMC is coming out, without knowing the interpretation of how the market is supposed to react to the FOMC. Just a typical end of a correction that you would always see, the same entry that we would always see. And then you can see that after that point there was a strong downtrend that continued for a long time. Now if you keep going back further and further and look at what happened when all the FOMC statements came out in the past, you'll see that there's a pattern that the FOMC tends to end a correction many times. Sometimes it ends a trend, and occasionally it comes out in the middle of a trend or correction. But the important thing is, it should be fairly obvious that when you have a pattern that looks like this, the end of the correction is the thing that would make the most sense to happen with this pattern. And the news, a lot of people often think about news as something that could mess up a pattern, but in reality, news creates patterns, because that's why we have the patterns, is because news is always coming out, and as it comes out, it forms these patterns. These patterns are sometimes referred to as Elliott Wave, and traders have found different ways of describing some of these patterns, but Elliott Wave is the most accurate way of describing what happens in financial markets. And in all of the examples that I gave before in previous videos on how to trade the news, I had never done anything to follow fundamentals. All I did was look at the pattern, and as you can see, it worked every time.